So going from being an attorney to then becoming a financial advisor, that's quite a leap. I've always been fascinated by that.
Well, to me, it wasn't much of a leap. Frankly, when I think like a lot of people coming out of college, I didn't know which direction to go. And so I was kind of steered towards two directions, law and finance. And finance to me at the time always felt like, basically looking at spreadsheets all day, no person involved. And so I went into the law route thinking, well, this is a better way to combine my interest in economics and business, and also combine my skills with Asia and my knowledge of Mandarin. But after being in the law for a couple of years, you realize, yeah, the people piece is not that developed. There's not a lot of involvement with people the way you thought you would be helping folks.
That's interesting because when you think of an attorney, you're like, oh, well, an attorney represents somebody and they have to have some sort of rapport sometimes, I guess.
Well, I think that not to denigrate attorneys, John. I don't want to get a lot of angry attorneys on me, but it's a very limited role that you play, right? For a specific amount of time, you're doing a specific job. And I think I wanted to develop longer term relationships, and I found it was always a little limiting there. The other limiting factor about being an attorney, especially in New York City, is in order to really make it work, you have to be really good at one little part of the law. People hear, oh, hey, I'm an attorney. Oh, can you help me with my divorce? Can you help me with my bankruptcy? But we all know they're very specific areas of the law. And to me, I've always found myself to be much better at being a generalist, and I enjoy being a generalist.
Yeah.
And so
being a specialist is really boring in a lot of ways. I mean, I shouldn't say that. I'm sure some people get, when you dig so deep into something, you hit new levels. And I respect that. I mean, I'm not, but like, I agree with you that, the generalist people like different stuff, so it makes life more interesting.
And so, I kind of hit upon being a financial advisor through being an attorney. So out of law school, I ended up at a small firm on Wall Street representing advisors and brokers when they would get into trouble. So they'd come see us and say, hey, I just sold this grandmother futures and now she's suing me. Can you help me stay in the business? Because I need to feed my family. And so after
do you have a time machine?
Right, exactly. After a little bit of that, I said, this is a really interesting field where people should really be helped. And there's too many folks who are focusing on the wrong things for the, so when I had the opportunity to move up here to the Berkshires, I said, maybe this is a good time to make a switch, to find something where I could use my knowledge of law, tax, business, economics, and combine them together in the generalist way that I enjoy. And I think there's a lot more value from finding the overlap between two different areas. It's one thing to go to the specialist when you need knee surgery or something, but when you're dealing with people's finances, everybody has different problems that are the most important problem for them.
Right.
So to me, it's okay, let's figure out what that problem is for you. And then let's take a look at your whole picture and see how we can solve that the best in the best way possible.
So you said something about Mandarin. So you spent time in China, and what was that all about?
What was it all about?
Because it's kind of like a footnote, like when I see Matt out and we have conversations and so forth, it's kind of known, like it's almost like this kind of almost maybe now like an urban myth, because it's like because you're so established here and everything, but there was this time that you were in China.
Sure. Yeah, I mean, I think sometimes life is chance and timing. What happened to me was I had to take a language in college, like a lot of folks. And the Hebrew classes that I was going to take were all full. So I ended up taking Mandarin, and I thought, well, I grew up in Seattle. I like Chinese food. I had a lot of friends whose parents were from the area, or from, China or Hong Kong, Hong Kong, China, Taiwan, or Japan. I'm interested in that. And it turned out that other folks in my dorm room were also taking Mandarin. So we already had kind of a cohort of folks that were interested in it. And I ended up really liking it. It also was, the practical part of my mind also said, hey, this is 1999. China's going to join the WTO. They're going to be a big deal. Maybe this is an important thing to learn. So I think, both from a practical standpoint, from an interest standpoint, and then just kind of lucked into it a bit, but ended up really enjoying it. So unfortunately, I didn't have time to study abroad in college. And so to me, before law school, I said, hey, I know once you start law school, you go down a path, I may never get a chance to live overseas. So this is my time in my 20s to basically finish my paralegal job at the big firm, take another year or 2 years, sell all my stuff, take a backpack and a messenger bag, and just move to Taipei with no job. And a friend of mine was already there. Thankfully, he got me kind of set up. But it was a great experience because I think there's nothing better than kind of landing in some place where you know very few people in a completely different country, and you barely speak the language that most people speak, and just trying to make it work. But it was a great experience. I'd never, I definitely suggest to anybody, any young person has the opportunity to do it. Ultimately decided, hey, I don't want to live in China or Taiwan. It just didn't seem like the right place for me, but it was a wonderful experience. And, occasionally I get to take employees or my wife to get Chinese food and get to use my Mandarin, but not too much anymore, unfortunately.
I think of that and I look at a couple points, teaching about yourself, because when you grow up, you're surrounded by people who are like you. It's family, and then the community, which is sort of an extension, of that. When you go to this completely, truly foreign place, I feel like you do learn maybe a little bit more about yourself because you are truly unique in that situation without those sort of natural connections, maybe. And then the other thing is there's got to be a lot of humility that comes into it, especially when you can't speak the language and like you got nothing. It's like you rely on other people to sort of help you out and like get there. So like I think that is a really valuable experience for sure.
Yeah, I think it's, in part, I think for me too, it was important. My grandfather was an immigrant. He came over from Poland after World War II. And so like a lot of folks, he came over with not a lot and had to make it work. And so I think it was also that feeling like this is an important experience to have for me, to, a family experience, to say, what is this like? What was it like for him? What was it like for my other prior generations to come over? And so it's something that's always felt like, okay, I want to have that experience and I think there is a big personal growth experience, as you said, but also felt like kind of part of a tradition to try to do something like that. But yeah, highly recommend it to anyone for sure. But the other part about it, I think you're getting into a little bit in terms of, being a lawyer, spending this time on Mandarin and then sort of giving it up. I think a lot of times in life we get stuck in certain places because of what feel like sunk costs. We spend all this money, we spend all this time, and now we have to do that thing. Otherwise, somebody's going to be, my mom.
Let's do this whole podcast on sunk costs. How about that? How about we just stop and let's do dissertation on sunk costs?
Yeah, exactly.
I love that concept. I love that idea because really it is real. People delve in and they go and continue on with this concept because they have this perceived or real investment that may not mean anything right now anymore, but they keep on going with it.
Yeah. So I think it's something I've always tried to say, look, all I can do is start with today. And I think in dealing with people's finances, sometimes there are a lot of sunk costs that, you try to navigate for folks, or attachment to things that, maybe are hurting their financial overall diversification or something. Maybe I inherited this huge position from, let's say GE. A lot of people own GE around here.
Sure.
It's like, okay, well, my grandmother gave me this GE stock. It was my grandmother. She worked at GE forever. I can't sell this GE stock. Well, that probably, has hurt a lot of people in this county to have that kind of mentality instead of saying, hey, this is GE. I have it. But what would if I woke up? I once heard somebody say, if you woke up tomorrow and you just had the cash and you didn't have the GE stock, would you buy it back? Most people would say no. It's just that once you have it, you already kind of have that attachment to it.
That's a great perspective.
So it's a similar kind of concept to sunk costs, but there are all these kind of little, I would call them sort of behavioral finance, behavioral economics pieces that we also try to blend in, and I also try to live by, on a day-to-day basis to role model for clients, for my kids. I think it's important to kind of live, when you practice what you preach, basically.
Yeah, so much of it is psychology. I mean, the market itself. I mean, I know, the market is not the only piece of the economy. Of course, there's so much more to it, but how much is psychology in this whole profession? Saying, because you have to, do your research and follow different trends and try to anticipate what is happening or where things are going, and then of course you have your own maybe bias that you have to break through, but then all these clients who have their own biases. That psychology is a big piece of this.
I think it's huge. I mean, I think it's becoming more known and people think about it more, but I think in the past it hasn't been a part of financial planning, of financial advising, working with clients on their finances. But I think it's a huge piece, because, it really is where the personal part of it comes to the finances. I can sit here and say, hey, we're going to do really well, but if it doesn't match the goals that you have, then it's meaningless. And those goals are very personal. Each individual has specific timeframes. This person wants to send their kids to college in 5 years. This person wants to retire in 30 years. Somebody else is 2 years from retirement. All those timeframes impact potentially, how you're going to have that portfolio invested. So I think the psychology of it also is both where you're coming from up to this point, and then also trying to, in a sense, of think about how would I feel if, right? How would I feel if I'm retiring next month and the market's down 30%, and I maybe should have taken some risk out when I didn't. So it's both a recognition of the story that you have with money. A lot of times families pass down money. The psychology of like how you feel when you see things, up or down, and then also sort of that of can we avoid the pain, or whatever you want to call it, of by trying to make some decisions now to make sure you're properly invested for that future at that future time.
And right now we're in a very fascinating economic condition. Inflation is just going wild. At least it is. I mean, at the grocery store, that's where I see it. The gas pump, of course.
Sure.
So that has to be impacting people. And there is a sense, and right now the housing market, particularly, I mean, everywhere, but here in the Berkshires, it's still hot, man. It's still popping. And I even was talking to an appraiser today who was saying, oh, and wait till it pops, because it's gonna there's this bubble is gonna burst, but it hasn't yet. There's all these interesting things happening, and how is that impacting the way people are approaching their portfolios and the market? Because there is this sort of sense that at some point this thing is gonna maybe hit hard, negatively. Where are you at right now? What are you thinking about the market?
I was talking about this recently with a play, but I feel like the way to describe it is that maybe we're a little bit in a fork in the road in a number of different areas. And so there are trends that we've seen for, a decade, 2 decades in some cases. And the question is, I think in a lot of different areas of life, including markets, are those trends changing now because of the pandemic, because of the impact of that, for other reasons, but you're seeing things like, for example, bonds. People are used to having bonds for safety to reduce risk in your portfolio. And now rates are moving up. And, I think there's folks that are questioning, well, are we going from a period where bonds have reduced risk to a period where they're maybe creating risk? So that would be one sort of inflection point that I think we're monitoring to see, like how much, or there are things that we can invest in outside of bonds to get that same risk reduction. Similarly, I think, you look at the job market, right? All the talk about great resignation. Is that changing fundamentally, that everyone wants to work from home because they've appreciated the flexibility? So I think I kind of chalk it up all to this idea that essentially some trends were accelerated during the pandemic, and maybe are now coming back a little bit, back to normal. Right. And you see that in the stock market, like things like Peloton that people were really into, Zoom, all those prices have come way down because people say, well, actually, life's not that different. We thought the pandemic was changing everything, but actually
it didn't change everything forever.
Right, exactly.
Or it didn't change everything forever. It changed some things maybe forever, but not everything. And, it's kind of like just this part way change.
Correct. And in other ways, you say, well, maybe this is a more permanent change. And so I think that's part of what I'd say is impacting markets right now, is just this sense that, okay, we're still trying to get back to normal. And, in a sense, I've told a number of clients this, it almost feels to me like we need a reset. Like a recession, nobody likes a recession. It's,
right.
But at the same time, it kind of feels like there's almost that something would need to take place to reset people's behaviors, people's habits a little bit back to what it was before.
Mm-hmm.
What's the natural course of how much we spend on travel and versus how much we spend on furniture? It's all been kind of pushed off of this because of this economic shock. And maybe, it may require, in a way, to get back to something closer to what it was pre-pandemic, some type of hey, let's slow, the economy slows down, we all kind of reset and we start back.
Yeah. I mean, because right now, certainly just for the average American, wages have remained stagnant, although they've gone up a little bit, but nothing to keep up with inflation now or historically. So it's been,
Correct.
So wages are still way, way behind. That's where I think ultimately either you need to reset there or something. We're out of balance, I think, overall from the working American as a whole. And I know you're not speaking for the working American. You have your set of clients who are in a different position in most cases.
Right.
But I find that kind of a stability point that's a little bit not stable right now.
Yeah, I think you're right. I think that's, on the one hand, it's also potentially one of those turning points. I mean, I think people that have had capital, that have had assets, have really benefited as, stock market's gone up, house prices have gone up, not just in the last couple of years, but just in general, and I think the other thing people are asking is, well, are we seeing a shift between the power that labor and capital have? Are employees going to have more power? And what does that mean for things like corporate profits, right?
Mm-hmm.
If employees are going to demand higher wages and they're a bit more in control, then as an investor, how do I look at a company like Target or Walmart, or, that now has to keep raising their hourly wages in order to keep pace? Does that then change my thought about what should that stock be worth?
Right. And maybe at some point you sort of look at what the value is of having the types of expectations that we've had on corporations or any business over the last, the assumption that quarter over quarter that you have to have X amount of profit to be performing, in reality, I mean, maybe it used to be, I don't know if it used to be, I'm not old enough to know, but a company that is operating, maybe they make a little bit of a profit, they're paying all their employees, they're a good community partner. That used to be kind of a good thing, but I think over time with the focus on the stock market and that really driving everything, that these corporate profits have become so important, and that really drives the bus, which also I think in part keeps wages stagnant over time and that sort of thing. I could be wrong, but that philosophy for the American worker hasn't been great. It's been great for the stock market, but maybe there's an opportunity now to sort of shift that mentality and still have the stock market be successful and people make money.
Certainly, you go back over time, the stock market's always been a good tool to grow your wealth above inflation. Right. So even with all the volatility we're having, we're still telling clients, look, you need to have stock exposure because this is the best place to be on a long-term basis, right, to make sure that you're going to not go backwards. Right. If you had all your money in a CD or in the bank over the last 10, 15 years, you would be losing because of where rates were and how much inflation is going to cut into your costs. So we can't avoid stock exposure. I think your point about is, I don't want to, get too much into politics. I'll leave that to you. But I do think that.
Oh, come on, man! You love politics.
But I do think that it does impact sort of how we think about what is the role of a company, and then that and it impacts investors. But I think every company looks at the dynamic of how much am I going to invest in capital, and, factories, robots, et cetera,
Right.
and how much am I going to invest in people? And I think that that's one of those really things that has shaken people up, is to say, well, what am I working for? When you have that kind of mentality, and more, real face to face with mortality with COVID, am I going to survive this? I do think you see the psychology, going back to psychology for a second, in people really shift a bit. And in good, in I would say, putting the politics aside, in good ways, right? I mean, people willing to start new businesses, right? And we want more innovation. I mean, one of the things we haven't talked about yet, but in those stagnant wages and during those times for the last 10, 20 years, we've also seen productivity go down, right? And productivity ultimately is what we need to keep the economy growing. We need companies to be able to do more with the people they have and the equipment that they have, but ultimately they need to be able to produce more. And so I think whether it's increasing wages, I do think we need to think about how can we make employees more productive. Whether that's training employees so that they can move up the chain better. Because otherwise, I think we will continue to have a situation where you're going to have a have and have not situation. And I think people across the spectrum, I don't care how much you have, there are people at the top that say, yeah, that's right. We don't want pitchforks either. Right. And so I think there is kind of a rethinking of like, what does that look like? How do we change the career path so that you're on a path that allows for people to move up, not just because they have a college degree, but because they are becoming lifelong learners, and that maybe they can stay with this company if this company finds a way for them to keep growing in the role that they have and move to the next role and get paid a little bit more. And I think you do see other countries that have a little bit different model, though I think it's working better for them in that regard. Germany is a good example where, they just have a much tighter relationship between schools and companies. So if you're not on the college track, that's okay. We'll send you more to vocational, and we have a program with Volkswagen, and we'll get you in there. And so they're finding kind of higher end jobs, but it's because there's a recognition that people need to be connected to that. It shouldn't be all on the individual to find that job and their career path. Let me find the next job. Maybe the company should be more focused on how the employee is doing.
Yeah, and I think that we've had this conversation quite a bit on the podcast about shift in mentality in our country, and certainly even in our community, about what it means to have education that will make you more employable. And so I think for a long time, at least there's a mentality that, again, the college education, the 4-year degree, and if you didn't have that, well, you're just in vocational or something like that. Well, it's kind of the other way around. There's high demand now for technical skills. And then ultimately, many of those students are the ones who become the business owners of tomorrow, who are super successful, the plumbers, the electricians, and mechanics who have their shops and that sort of thing. And that is in high demand. So as people are planning to pay for that college tuition, I'm sure there's some clients who are hoping that colleges and universities, at least state ones, will be free one day by the time their kids go to school. But that's, you can't plan for that. But with that said, that is a perspective that I think has shifted probably in the last decade or so.
Yeah. And I'd say, it comes up in the financial planning we do, because I think for people, in their, let's just say most of them probably 40s and 50s who, have kids that are getting to college age. One of the biggest things that we talk about is, how do I balance saving for retirement and saving for college? Because for a lot of people, college is going to be the most expensive thing that they pay for, for their kids, right? More than their mortgage, more than, any single thing. And, the more kids you have, the harder it is, as you know. So I think it is something where we think about that, and some of the planning that we're starting to look at some planning tools that kind of help do a better job of really delving into, well, how much is a school going to cost? And also, what are some of the hidden things that you don't see on the price tag, right? Like, this particular school may provide a merit scholarship, right? So a lot of people are, you know, in the kind of middle ground, right? They're not, they have more so that they won't get financial aid, but they have not so much that they really want to be trying to on the hook. They can't cover all of it, and they don't ideally want to have their kids take out huge loans. So can we find schools where we can look at it and say, it's not on the paperwork, but we know this school, and it's in some of the databases and some of the tools that we're looking at, like, can help kind of navigate this. This school is going to provide a merit scholarship, so this school won't, and they're otherwise roughly equal. So am I being short-sighted to just say, well, this is the school I'm going to go with? I think kids should be more part of kind of talking to your kids about finances is this discussion. Hey,
right. And understanding and knowing that you're going to have to pay a monthly payment
right
once you graduate from college. How do you feel about that other than rent? And it's also not something that there's no, I don't know, it's you can't get out of student debt.
Right.
Right. It's like you can't get out of it. So at least not now, until, well, if they forgive the debt, they forgive it. But right. But that's just traditionally it's been one of those things. And so it is interesting. So as you're balancing things, kids usually, it's one of the things they're not thinking about. They're thinking about, oh, I'm in a city, I'm in a rural area, right. It's a campus, this has a sports team that I'll be able to play on, that sort of thing. The finances usually aren't something that kids are aware of.
Right.
Even.
And I think, it actually reminds me a little bit of sort of some of the psychology too, of like status, right? How much is status important?
Yeah.
Right. You say to somebody, hey, I really, I want to go to this school because it's in a city. And you see it even with kids coming out of college. I remember talking to somebody at General Dynamics who helps recruit kids, engineers. And said, okay, well, General Dynamics at the time, let's say, was paying, I don't know, $65,000. And they said, we can't get kids to move to the Berkshires to work for General Dynamics out of school because they want to get paid $80,000 in Boston. And you're thinking, and my head, and from a personal finance point, I'm saying,
like, what are they, crazy?
You're going to do a lot better on $65,000 in the Berkshires.
How much is that diploma worth, kid?
Right.
Like, can you do the math on this one?
Yeah, exactly. And but I think for some people it's a status thing, and I've heard some similar things from people that I've met here who moved up, from, let's say, New York City during the pandemic. And a lot of the, let's say, tech firms that they're working for might say, well, you can stay remote, but we're going to give you a 15% pay cut because you're not living in a city. And so to me, I'd say, well, isn't living here 15% cheaper at least than living in New York City? I would think so.
Yeah.
But that's what they're tied to that again. There's they're really attached to that number. That's what they make, and they feel like that's in their head. I wanted to get to the point that I make X. Right. How can I move backwards?
Yeah. My gosh. Now, I mean, when you've lived a few years, then it's kind of like, okay, well, how much money is left over at the end of the month? Okay. And that's a really great place to start. But the other thing is, as far as the prestige goes, prestige of where you are, whether it's sort of in Boston or as opposed to the Berkshires, but then there's the prestige of the colleges. And I really love to see that analysis of the outcome, and maybe take out the, the Harvards and, and that sort of thing, and just say, okay, state school, state university outcomes versus expensive private schools, and again, we'll take the outliers out, the Harvards and so forth, but like, what they are, the Middleberries.
Well, actually, I mean, Malcolm Gladwell has done some interesting, like, kind of discussions on some of these things. And, I think there's the issue that you make of the status for the individual, but there's also it actually in some ways could potentially be harming the economy in ways we're talking about. So, what he's looked at is, okay, what happens to somebody that is really interested in math and wants to become an engineer, and they get into Harvard, okay, and they get into their first math class to be an engineer, and what happens? They're kids that are incredibly much better at math than them. So what do? They get disappointed, and they're like, I guess I can't be an engineer because I can't be these kids. So whereas that same person would be fine at a state school and would end up being an engineer, and there would be no difference in their ability to be an engineer, let's say.
Yeah.
So I think that there's fewer people going into those STEM programs at schools because of the status and the, when they get to those other schools, and then you end up with folks that are getting degrees that maybe they are not even what they're interested in, right? But they wanted, they lost the passion for something because
they're getting beaten down by all these super math wizards,
right? Exactly.
And so
so fundamentally, I think that's a piece
the opposite of Goodwill Hunting or something. I don't know, like what is the bizarro world?
Yeah, exactly. But I do think, when you look at the numbers, it is clear that it doesn't really matter, where you went to school. Certainly for your undergrad, most of the things I've seen is like where you went for your undergrad doesn't matter. Maybe graduate school, you try to get into a better school, that can matter. But, the difference between an engineer from here and here, I think is mostly not that important for a starting engineer.
This segment is sponsored by Berkshire Community College,
yeah, exactly.
and Mass College of Liberal Arts.
That's right. Not my alma mater, just so
no, right. But it really is. And so I wanted to make that point because as you're thinking about this, that's I don't know if you've ever said to a client, hey, you ever think about Westfield State? Because gosh, they got some great programs there, as far as that goes. Because I mean, at the end of the day, if you have college money saved up, and you don't spend it all and you still cover the costs, that money is money you get to keep, I assume, right?
Sure. I mean, you can,
how does that work?
Yeah, sure. So your question regarding like the way 529 plans work,
529 plans,
which are your college savings plans, which, just to give some basics, every state has their own 529 plan, but you can get your 529 from any state. Because any plan will cover any school in the country. And in some cases, actually, like some study abroad programs and schools outside the country. As long as the school qualifies for financial aid, basically, you can then use that 529 plan for that school. But the idea is just similar to a retirement account. You put the money in. It's in some states you get a tax deduction. So in Massachusetts, you get up to a $2,000 state tax deduction for each year. But
you're putting that in pre-tax,
putting it in after tax.
After tax.
Well, okay. In state, it depends if there's a tax deduction, but let's just, for the general purposes, it's mostly mostly after tax. And then it's going to grow tax deferred. You're never going to pay tax on it if all the money goes during the time frame it's growing, hopefully, right? There's no taxes on it. And then if the money's spent for college, then or educational expenses, which are pretty broad, they can include things other than tuition. Sure. Then you can go ahead and not pay any taxes on the gains, on the growth of those funds. So it is a good way to put money aside. But to your point, I think a lot of people say, well, why would I do that? What happens if my kid does get the full ride? Right. And let's just say you only have one kid. Well, you can transfer those funds to the next generation. Mm-hmm. Maybe that your child has kids and then you move it to the grandkids. But even worst case scenario, you take it out, there's some tax penalty, but it's not, you're going to pay taxes on it, but it's not so enormous that you should really worry about it. I think it's better to, I like to be optimistic and think, this money is going to get used one way or another. Maybe it's grad school instead of undergrad. It's there.
So basically, if you're giving it to your kid or what have you, maybe if he or she takes it out, there's taxes that has to be taken out. But again, there's grad school or maybe even for their kids.
Yeah, and perhaps. Right, and you can move it. You can even move it between. Let's say if you have two kids, maybe one kid gets the full ride and one kid doesn't. Well, then you can move the money to your other son or daughter.
Yeah.
So there are options there. I think the more important thing is to be thinking about it. And probably the most important thing that, you sort of touched on is, are we having the conversation? As parents, you want to give everything to your kids, right? We all feel that way. Like, I don't care what it costs. That's like, they go to baseball camp, we're just going to do it. But the reality is, like we said, this is a major financial decision. And I think it's, if you put it to some people this way, do you think that your son, let's just say, wants to be taking care of you in retirement because they went to this school versus this school, right? I think that most kids, even at 17 or 18, would say probably they want to have nothing to do with their parents at that age, but would say no. Like I'd rather that my mom and dad, or mom, dad, whatever it is, are okay, that they feel like they can enjoy the money that they've saved.
Mm-hmm.
That's more important to me than going to, whatever it is, Smith versus Westfield State, whatever the the comparison is there. But I most importantly, I think it's that assumption, right? I think the parent assumes that I have to do this because I'm a parent, right? And I can't talk to my 17 or 16, or you could even be younger, but
there is that mentality, like, oh, well, my kid got into Williams, I would feel like a jerk if he or she wasn't able to go to Williams or Harvard or what have you, because we can't afford it. Getting in is really hard,
right?
So therefore, so that has to be something that weighs on parents.
Yeah, and yeah, it does. But I think it's it's worth at least having the discussion and saying this is what we can afford. Mm-hmm. This is what you would take as a loan, and then at least the person, the parents going in with eyes open, the child's going with the son or daughter's going in with eyes open. But I think it's when you don't have those conversations that you end up making poor decisions, right? And some of those decisions can be hopefully benefit from having discussions with a financial advisor that can be more objective about it, and kind of say, look, I have no skin in the game here. Like, it's your life, but let me just show you what the differences are between this and this, and think about it. That's part of the reason when I was putting together my new firm, I wanted to try to come up with a way of describing the approach, and not the approach from most firms will say this is our investment philosophy, and I could talk to that, but I think what most people know is, how do you work with people, right? Mm-hmm. And the 3 pillars that I came up with were interpret, educate, adapt, mm-hmm. right? There's a lot of financial jargon. You don't know all the rules. I have to interpret this and speak it to you in language that you understand, educate you on why it matters. Why do we need to know what the tax deduction is on 529 plans? Why does it matter to you? So once I've interpreted it, like what we need, and then all the financial jargon, then let me educate you on why it matters. And then, it's your decision. You got to adapt. I can't, in most cases, say when, whether you should send your kid to Williams or Westfield State, right? But let's know what the consequences are going to be, and not kind of think down the road, geez, I really wish I would have known how that would impact my future. That's the best we can do.
And the firm is Tableaux.
Correct.
Tableaux.
Yeah.
Okay.
Tableau Wealth.
Tableau Wealth.
you want the story, John, behind Tableau Wealth?
No, I don't. I just want to make sure I said it right.
Oh, I see. I see. Some people want to know where the name came from.
Where did the name come from? Of course, I want to know.
Well, I figured you would.
Hey, John, why don't you ask me? Where did the name come from?
What's a common question? Look, I mean, everybody, a lot of firms, the name of the firm is the name of the person, right?
Yeah.
And I don't think I'm all that important in this, right? And my goal, if you create a business, I think, as a small business owner, is you can pass it down, right? And you can involve other people. You can bring on other advisors. So I think having a name where it's me, it doesn't build into that thought that this is not about me, right? Similarly, I didn't want to have anything where it was kind of tied to any geography. I have clients in California, Florida, Colorado. So it has to be something that lends itself to a broader scope geographically. And I wanted something that kind of spoke to this idea of the uniqueness of each client. And so, and a way to describe sort of the way that we look at their financial picture comprehensively. And so sort of just came to me in the middle of the night, like a lot of ideas, that Tableaux had the feel of Tableau, meaning sort of picture painting in French, right? It's got the X, so it's multiple pictures and paintings. I thought it spoke to me of for every day, how we're dealing with each person's financial picture. And there are multiple financial pictures and very different pictures. But also throughout someone's life, to my own, giving my own example history as an example, I was going to be a lawyer and now I'm not. My financial picture changed. I lived in New York City. Now I'm in the Berkshires. My financial picture changed. So the question is, in each of those, how are we approaching each person with their own financial picture, helping them paint that picture, asking the questions that they need to maybe imagine, hey, what's retirement going to look like? What do I care about? And then when those things change, we have to brush, maybe it's just touch up the picture. Maybe we just need to start with a new picture, blank slate, start fresh. That's what we do every day, is just try to treat people with in the unique way that they are and the goals that they have, and help them when they hit those different turning points in their life.
Love it. Tableaux. Say it with me now. I love it. Crypto. I mean, depending on who you talk to, it's the greatest thing in the world, and it's going to make us all millionaires, or it's a complete sham. Stay away from it. Maybe it's somewhere in the middle. But what's going on with crypto?
What's going on with crypto?
What's going on with crypto?
I mean, there are people that are they're much more knowledgeable than me in this area. I try to keep it pretty simple. Anytime there's a new technology, it's always going to change the world, right? And people get excited about it. In the 90s, it was the internet. Internet is going to change the world. Now, looking at it now, 25 years later, can we say the internet changed the world? It did, but there was a huge speculative period. And, I heard somebody say something once that I thought was pretty powerful in this regard, which is speculation builds the foundation for innovation, right? Everybody is excited about the new thing, and there might be hundreds of companies that are trying to get into that new thing, but not all of them are going to succeed. And whether it's car companies, right, there might be hundreds of car companies. I think at one point there might be thousands of car companies. Now, how many car companies do we have? Only a few, because only a few survived. Only if you had the benefit of the manufacturing line that Ford put together, or sometimes just timing and luck, the right people, whatever it is, but those few survive. And at that point, is something to be said for, there was some benefit of car. The cars were going to be important. But could you say at one point, like, should I choose Ford over, I don't know, Studebaker when you were looking at stocks at any one point? I don't know that you could. So I don't purport to have any thought about, like, is Ether going to win, or is it, so to me, I think you always want to be wary of the time frame when everybody's getting in, and you wait to see, like, when is that crash? There's always, I would say always, but, like, generally speaking, there's a point in time which all the players kind of coalesce. Some fall away, go bankrupt. People then suddenly say, "Oh, I can't believe we're so high, excited about X." And then a few players are still just doing their thing and building the real value in it. And I still think we're very much in the speculative period. And, just like car companies, there are, I think, 7,000 different cryptocurrencies. How do I choose one or the other? You could say, well, Bitcoin's been around the longest. Okay. Like, is that a reason to mean that Bitcoin's going to be the winner? I was telling somebody else, Lyft was the first ride sharing app before Uber. I said, really? Uber's like the biggest one now. Isn't it bigger than Lyft? I think, yeah, but in they're public and whatever. But okay. So you just think that because they're bigger now that they were the first, and it's often not the case. So I think, it's something to watch. I think that the technology is pretty interesting. But I don't think we've necessarily gone through that, final crypto winter, or whatever you want to call it, that would then leave a number that say, okay, now we have a real value here. This is a real currency that people are using in right life.
And that's the thing, I guess, that to me, that's the real gap. But of course, I mean, there are people who have made millions, maybe not billions, but hundreds of millions of dollars, in crypto. I think there's a guy who has bought a whole bunch of properties in Linux. He's a crypto guy, and he made a fortune off of crypto. So, people have made real money, but there is that gap between functionality of what is this? What was this originally supposed to be? And is that actually ever going to be what crypto is, because right now it's just all the speculative aspect, because what's the value, and I think, Mark Rosinski and I were talking about this. He said, hey, you got a lot of crypto, do me a favor, buy me a beer at this bar with crypto. You can't do it, right? So and that was his point. But anyway, I just find it very interesting, because there's just so much that people don't know, other than the fact that there are some people getting really, really rich off of it.
Well, and so then I think it leads to people getting, duped, whether it's scams, because, there's supposedly, right.
If you're on Instagram, you have been approached
right
by a lot of crypto dealers.
My understanding is each of these cryptocurrencies supposedly has some project, right? Where it's like, well, this is the cryptocurrency that you're going to use to make sure that you are anonymous on the internet, like, or some little activity that you do in daily life, right? And this is the coin that you're going to use to do that activity. But yeah, is that activity something you are going to do a lot or a few times, or are we even going to, is that even useful for you? I think when it comes down to it, there'll be probably, assuming it survives, I think you'll have a few things that are kind of like the same as your frequent flyer miles, right? Somebody likes to fly on Delta, they get a whole bunch of Delta coin, and right, that's how they purchase their Delta airline tickets, right? Others, could have broader uses, but nonetheless, if you in your crypto wallet, you're going to have a few potentially, basically, that things that you care about, you need to do it, maybe buy that beer or pay taxes or something, and then there's some that are sort of just related to your hobbies, right? Because I think it's everything between an investment like a security, like buying, the S&P 500 index. It's everything between that and basically miles, right? Reward points and everything in between. And so every current, I don't also kind of loop them into one. I think you have to think about each one separately as a separate sort of use case. And but I think most people, when they buy them, are just saying, which one's gone up, right? I don't think anybody's digging in to what's the project.
Yeah.
Some of them, right, as we know, are like, there isn't even a project, right? Like, so I think the Dogecoin and one of the other ones are, it's just a joke. There's
just
no
made up
right.
shit.
Right. There's nothing you could use. There's nobody trying to build software around it, right?
Yeah.
So I think that's it's dangerous when you get into that mindset, like, let's just buy this thing because it's going up, and no one, I think, is doing the research to say, like, which of these projects is ultimately going to have some benefit. So I still think it's very much in that speculative period. Certainly it's not really feasible. It's becoming more feasible for clients to invest in it. I have clients ask about it, but it's not something we do, certainly, at this point. The other principle, in addition to the speculation, builds the foundation, that I always look towards is what I call sort of Levi Strauss principle. And what I mean by that is, you go to a gold rush, right? Everybody thinks they're going to strike gold, right? Who wins? the person who supplies the jeans. I think it's the same here, right? Like, every one of these cryptocurrencies, they think they're going to make millions of dollars. Our project, we're going to be the premier cryptocurrency for whatever it is, NFTs or something. Okay, great. But, you're just paying for gold. But who's benefiting? The folks probably that, the semiconductor companies, right, that are needed to do the mining, these other suppliers to the area are, I think, where you start to say, that's maybe where I would look to invest in, because
and the third party people selling it also, like I said, all these messages you got on Instagram,
right?
Those people are, I'm sure, making a cut, and obviously, or else they wouldn't be doing it. So, it sounds to me like that could very well be the case, and like it's sort of these cottage industries that pop up around this whole concept, which is strange and new to people, most people anyway. I mean, I think if you really ask anyone who has heard of crypto or even has invested it to really explain what it is, they may have a difficult time doing that. I know I have a difficult time explaining what it is. I know we've had forums here in the Berkshires all about crypto, and I'm sure, if you went there, maybe you'd know more. But
Well,
But
maybe you need to have Paul Farella on. I know he knows a lot more than I do about that.
I know. So, but it's just interesting in that concept, especially when you're thinking of like, well, diversifying. Does crypto need to be a piece of that, even if it's a small piece?
Right. Yeah, I mean, I've definitely seen some discussion of that in sort of financial planning world. Like, is it 1%? Is it 2%? Yeah, if it's not going to ruin, like a lot of things in life, if we look at your financial plan and if this is not going to,
if it all disappears tomorrow,
right?
Everything you put in, if it disappears tomorrow, are you going to be okay?
Exactly.
Yeah.
I think about similarly when folks really want to buy, a few individual stocks, right? We don't tend to buy individual stocks, but sometimes somebody says, hey, I really like to buy this. Okay, is it going to upset your plan? If not, I actually think it can be beneficial, right? I kind of think about it as what's going to help you focus on your finances. If having one stock that helps you look at your portfolio occasionally and focus on your personal finances because you now have this one thing that you're watching, it's just like fantasy football. If you're playing fantasy football,
you're going to get better at it.
You're going to get better at it, but you're also going to be, you're going to care a little bit more. So, having a few individual stocks that you've picked and you've, had a thought process behind, and it's not throwing, going to upset the apple cart. I think it can actually be, pretty beneficial for clients to have that and feel like, okay, this isn't just I get my statement in the mail and there's a number at the bottom, right? Okay, where's the number at this year? It's okay. I know that I was looking at this. Where has it doing?
It hit 10%? That Chester,
right? Yeah, right. Exactly. So, I think about it the same way. If the 1% is going to be, is going to help you focus on the big picture, then and not going to upset the apple cart, go for it.
Tell me about your journey to the Berkshires.
Sure.
You're not from the Berkshires.
I am not.
Where we didn't catch that. Where were you born?
I was born in born in Florida, in Fort Lauderdale, and moved to Seattle when I was 7. Big change going from sunny Florida to Seattle. I remember distinctly losing my tan after one winter.
It took a whole winter to lose it.
Yeah, exactly. But this is what happens, right? My dad got a job at Microsoft in the late 80s, and we moved to Seattle, and I grew up just outside of Seattle in a small, I don't want to use the word small town because that means something else in the Berkshires, but small compared to Seattle, of about 25,000, called Mercer Island. And it's just outside of downtown Seattle. And it was a great place to grow up. But I always kind of had a pull towards the East Coast. My family's from in and around New York City, so I always kind of came back and really loved the energy of being on the East Coast and something about the walkability and just everything about it. Quite frankly, I'm one of the few people who went this way. But it's just been in my nature since a very young age. But ultimately, I met my wife in law school, Catherine, and she grew up in Stockbridge.
So which law school was that?
It was Cardozo Law School. It's part of Yeshiva University.
Okay. Kind
of right around kind of by NYU in Manhattan. But when I met her, I started coming up here and to see her parents and who still live in Stockbridge. And what I really discovered to me was the best blend I've found anywhere of the things that I enjoy, right? The culture of museums, the theater, that when you're living in a big city, oftentimes you don't even have time for, right? You're too busy in the rat race that you don't really get a chance to enjoy.
Your commute takes up too much time.
Correct. But as well as the outdoors that I had growing up in Seattle, I did a lot of backpacking and hiking with Boy Scouts and loved nature. So I sort of really grew to love it up here. And when we were thinking about, let's get out of New York City, we want to raise a family and we can't do that in a 600 square foot studio. Where's that going to be? And I sort of said, what do you think about this to my wife? And she said, like a lot of people, I never thought I'd move back to the Berkshires, but maybe that'll work, and we tried it a little bit and it really did work. And we both, love it, and we've been here about a decade. And
so when you first moved here, was that were you still in the sort of attorney mode, or and when did that happen?
So my wife moved up first and I was still kind of finishing out my job. And we started sort of connecting with some family friends about, what are some opportunities, as a securities lawyer. And what I had done in law firm prior, really, there's not much of that around here. So I would have had to probably change the focus of my legal career anyway. But I talked to a number of law firms, but I always in the back of my head thought, I really want to move to being a financial advisor. And thankfully, I found a family friend who took me into his team, and we grew from there with some other advisors. But that was crucial to find that right person to invest in you, right? I always tell kids, if you can find the mentor, that's going to help you, find that person. That's the reason, right? You go and you get your informational interviews, and you stay in touch with these people, because you never know who's going to be that connect you to the right thing. But thankfully, I found that right advisor, and I was able to build on his skills, hopefully, and just see how he does things. I think historically it's kind of like survival mode, right? You get into like the training program for Merrill Lynch, and okay, we'll give you 2 years, you make or break it, kid. And a lot of people wash out, right? Because then it's so focused on selling.
I find that I love the idea, because it's scary when you go from something that you feel comfortable in, you're growing in, and then you're really in a lot of ways starting from scratch. Because when you're doing that, it's like it is sink or swim, because it's not like, here kid, we're going to give you 200 grand just as a salary and have a nice day. You have to like get the clients, and you have to build your own client list and that sort of thing. And if you don't do it, I was just having a conversation with a gentleman who's been in the radio industry for a long time, Steve Cesari, a good friend of mine, and he talked about how he went from high level VP HR, but he knew he had to do sales, so he became a sales accountant for a certain territory, and that's where he started, and he made that leap, which to me was amazing. His base salary was like 40% of what he was making, previous. So like, to do that takes guts.
Yeah, I mean, we each took major pay cuts, I would say, to move up here. I mean, I had no job when I moved up initially. My wife was working with her father. I think took about a 75% pay cut, and I think mine was about 50%. But I think you're right. There is something to be said for just kind of saying, again, hey, if this is what we want, then let's go for it. But I think what I really appreciated about what the opportunity I was given was that, yes, there was some sink or swim about it, but I also knew I was part of a team that I could learn from. It wasn't a timeline, of, hey, if you don't get X number of clients, you're going to be booted. It was, hey, I want to grow you and your skills, such that you can take over some of my clients in the future. And to me, that was a really a special opportunity that I hope other financial advisors get. I think there are a lot of advisors who could be good advisors, but they don't have the space to learn how to communicate and engage with clients. Right. Not everybody has the same sales style.
Yeah.
And especially, I think
a lot of people aren't really great under pressure. So like, while yes, you need to put that aside and have that conversation with a client, if you are under this sort of cloud of, oh my God, if I don't, sign this guy up, I'm totally like, this is not, and that permeates into
Absolutely.
what you're doing and into that conversation. It's a lot of people, some people thrive with that, to be fair, but a lot of people that just will shut them down, and their real talent won't blossom.
Correct. Yeah. And so I think that there are, and certainly I think historically our industry has been just sell, right? Just sell, just keep selling. And I think the more important thing is to get the point where you can say, I'm going to take on this client because I think they're going to be a good fit for me, and I'm going to be a good fit for them.
I just had this image pop in my head, and I'm thinking to myself, because there are some firms out there that it's like used car salesmen, or actually even new car sales. Because if you ever like go into one of the car dealerships had it or something. You get out into the parking lot, and it's just like you're just like,
Right.
like people are running at you, like
Yeah.
throwing themselves at you, like, can I help you? You know, that sort of thing. And it's just so tough, you know. And I have a ton of respect for people who can do that, but that, you know, when you're dealing with your finances and that's so personal and everything, man, you know, to have that personal touch. So I think that level of that smaller firm and that more personal touch is such a huge thing. It really is. And I mean, what is more personal than your finances?
Yeah, I mean, it's not, you know, it's not
I
to
mean,
say that other firms, you know, that do it differently aren't great. I'm sure they are. I just think that they serve a different customer, right? So, you know, I was at a conference and they talked about how there are advisors who want to have a solo firm, right? They just want to run their own thing. And that requires them being very specific about every single client that they take on, because they only have a certain number of people they can handle on an annual basis. Other firms want to be kind of more boutique and have a few advisors and feel like we're still, you know, very focused on, you know, the quality and we have a small family. And other folks want to just grow the business just like any other business. So you have to kind of decide, I think, you know, where you're going to be. I'd like to, you know, I'm hoping to get, you know, in the boutique. That's sort of my goal is to continue to do that. But, you know, I think there are lots of people who still need financial advice, right? There's still a lack of people using advisors. And, you know, when you look at the studies that Vanguard runs on people managing their own money, it's, you know, it's a noticeable performance difference. People that use advisors, they found did about 3% better every single year. And that 3% adds up. So, you know, I certainly think, you know, that everyone could benefit from it. Generally, there are people that want to do a little more of it themselves and they need more of the education. There are others that want it kind of more concierge, you know. Everyone's different, but I think there's an advisor who you can find who will provide, you know, we just need a plan, or we just want hourly, or we want everything, you know, we need you to manage, we need you to do the plan. There's a good financial advisor, I hope, for everyone. And you know, then just watch out for the bad ones, I guess. Right.
And so again, you could have clients from all around the country, but you are located in Southern Berkshire of Massachusetts, and specifically Stockbridge, right? So that has its own character, Southern Berkshire. So, you know, tell me about what it's like working there and being in that community, because you're very involved in the community.
Yeah, you know, I've so far avoided the politics, but I do feel very involved.
You can be in the community without.
I know, but
I think you've been on a chamber board.
Yeah, I've been on a chamber board. But I do think, you know, well, I was thinking about this morning a little bit, in that a lot of, I think, the source of some of the, I don't want to say problems, but I think technology has changed the world, and people interact with, you know, online a lot more than they do with people. And that's a different relationship that you have with somebody online. And then sometimes it can really harm folks to have that kind of lonely experience online. And one of the things I love about being up here is, and Stockbridge certainly has this, you know, is you feel like you're part of a community. You know, could be people that I've never gone to dinner with or had a cocktail with or anything, but they know me, I know them. I see them at the post office when I pick up my mail, and we're all in this together. And so to me, what it means to kind of live in the Berkshires, and Southern Berkshire certainly has this, is to be part of the history, the narrative of all that's happened here before. And I think part of the really strong narrative there is we are a community of different people that all come here because we love this place. We all have different backgrounds, you know. Yeah, I think I kind of just to stereotype it, I generally group it into 3 categories, right? I think we have, you know, the folks that have been here for generations. Oftentimes, you know, they're like tradespeople, and that's needed, like to your point. You know, sometimes then you have like artists that, you know, can't survive in New York City, but they want to create, right? They're creators, and they are here to create and be excited, you know, have the muse be their environment. right?
Mhm.
And the people here. And then you have like sort of the people that have done things elsewhere and now move here, or they have second homes here, and they're part of it. And all those people come together in, various organizations. In not to say it's always smooth, but compared to what you would think it would be, I think it's really nice to see how people get along here and care about each other and care for each other.
Mm. And what I found is that, of course, it's a very touristy area. You have Red Lion Inn there, and I worked at the Stockbridge Golf Club when I was a kid. My mom was the clubhouse manager there, and I just remember when people would come to the Berkshires, and we had lots of Tanglewood people. John Williams would be as a member there. Things like that. But like they literally came here to relax. And I think that's like I think that's really beneficial to the whole vibe here because there's a sense of, all right, like we live here. We want to get things accomplished, but also there's a little bit of a nice relaxing vibe to some extent. I mean, dealing with the tourist traffic sometimes is not so relaxing. Guido's on a Saturday morning, maybe not so much all the time, but there's that certain feel that this is a place where it's sort of like a refuge, and I think that kind of is a benefit to what we do here to some extent.
Yeah, no, I agree. I mean, I think there's a constant discussion about work-life balance, right?
Mm-hmm.
And I think it's sort of just built into being here, and I think everyone benefits from that. I mean, you see recognition of that at big tech companies. You're going to spend one day a week doing something totally unrelated to your job or whatever it is. I think everyone can benefit from having a little bit of time to step outside themselves and outside their job and their commute and all of that. So I think it kind of goes to the people that are everyone I would find is probably just a little more creative than they'd be, a little more thinking outside the box, a little more kind of stepping outside themselves for a second and thinking about everyone around them and the people and the places and the history. So I think it's always beneficial to try to relax and to try to think about let your mind wander a little bit. Let me put it that way. I think everyone could benefit from just kind of staring at the hills for a second and just saying, huh, that's nice.
Yeah. Get some quiet, and be still. You're a dad. So
yep.
Tell me about that a little bit.
I am a dad. I have two daughters, 5 and 2, Leah and Zoe, respectively.
Right in the teeth of it.
Yeah. Well, I have to give all thanks and credit for their growth to this point to my wife, Catherine, because I probably work more than I should. But it's being a dad, it's I tell new dads this, and it's probably maybe just my experience, but I found others do it. I think it's hard for dads to find their place, right? Especially early in, first year.
Yeah.
You don't know, especially if like there's just such a bond, and it's sort of how am I going to overcome this bond and build a relationship. So I think I kind of take the approach that being a dad is just to kind of be there, right? To be there whenever your kids need you, because I think most of the problems, at least so far for me, I'm not the one that's resolving those that my kids want to turn to, but I hope that they know that I'm there to any questions they have, right? And I think I've also been amazed by how much their identities to date are felt like they were there from the beginning, right? So that's something that people say that, right? They're like, oh, they've always been like that, and you say, come on, are they really the same when they were 2 days old as they are from the 20? But I think there actually are some elements of that where and it relates to this. Once heard somebody, a child psychologist, sort of say, you have to think about your kids as a gardener, not a carpenter. So how do you shape them? If you're doing topiary or bonsai, this child is going to grow in a certain way. naturally, and you could try to kind of move it slowly and shape it a little bit.
You could put that stake next to
Right,
it
exactly,
and tie the string
yeah,
or whatever it is.
but you can't think about it like this child is going to be a lawyer, this child's going to be a doctor, they're going to follow my footsteps and be a financial advisor, or I'm going to make sure they go to Harvard, whatever it is. I don't think anyone benefits from you trying to really be hard-nosed about. I think it's better to give them the space to find out who they are and what makes them tick and what they're passionate about, and then support that where you can, and then I guess also be open to the fact that could change multiple times, right? Could be really interested in this and suddenly they don't like that, but
I do think that is one of the great parenthood, like you said, it's like an art, and the art is that balance and seeing something light them up and then being able to encourage them in that direction and understanding that can change all at any point. But then also, yes, not steering them in a direction that's against that natural flow, because you want to. So and we're always learning more every day. And then sometimes they surprise you over time, like, wow, my kids really do like baseball, like a lot, and so I didn't know what to expect, but they love baseball, as an example, just like I did. So that's cool, but they surprise you all the time. And but I think it is that balance. And I think we learn from our own childhood too, because, I don't know what your childhood was like, I don't want to go too deep, but you can show, I don't know if your parents pushed you to be an attorney or not. I don't know. No, but that's kind of like, really great parents are the ones who, help boost you to go to your passion, and not push their passion, I guess.
I mean, my dad has always been into computers and, programmed since he was 16. And so I remember very strongly at age 9, he said, well, we can teach you how to code and make your own video games. And I said, I just want to play baseball and soccer, maybe, I guess, in retrospect, I don't know whether I would have loved doing that. There are elements of it that I think I would have enjoyed, but my immediate reaction was, I'm not going to do that. Right. I'm not going to do that. So I think that it's you definitely have to watch out for those steering moments.
And sometimes there are things that, like, if your dad did it, you just don't want to do it, as an example, and then in some cases, and again, this is where the nature versus the nurture. It may be the nature where the kid just wants to do everything their dad did, it's really interesting, because everyone nobody is the same and no kid is the same. And I've got 3 boys and they're similar in a lot of ways, but super, super different in every way. I'm sure your 2 daughters are very similar in some ways and like really different.
Exactly.
In other ways.
Absolutely.
It's good stuff. Nothing like it. So you're growing as a firm, it seems like. How's that going for you?
It's I think every stage of being a business owner has its own scary aspects, right? I had to first make the leap and come up with the brand and the logo, and with help, of course, and find my first employee, which turned out great. And now, I just realized, hey, I want to give myself the space to do certain things, and I also enjoy the process of educating. So I want to give I've found a new person to help initially with the planning, and then hopefully be a junior advisor in the near future. But I think if I'm happy with the services we're providing, and I want to be able to make sure we have other advisors that can do that as well, as we grow, especially one of the things I haven't mentioned yet, but relates to the idea of different folks needing different levels of service. We wanted to expand to folks who wanted to manage their own investments but wanted to check in every quarter, and so can we do an hourly thing for them, or folks that really are comfortable managing their own investments but just don't have a financial plan. So we've added that. So I've brought on a gentleman, Kyle, who's going to help with some of that. So it's I think it's trying to serve those folks. I think a lot of people think about it from the standpoint of, well, I don't have enough money, right? Like I don't have enough money to to have a financial advisor, right? And I think that that's
Well,
where,
Matt, how much money do you need to have a financial advisor? I know.
I mean, they're right. They're financial advisors, like I said, they're financial advisors who will do anything. But point being that, I think most of the time what happens is somebody says, hey, I'm about to retire and I've saved up X, right? And can you help me? Right. And the person says, sure, because you have X, which is what you need to have to work with me. And you think to yourself, well, what happened if that person met a financial advisor at 25 and that started building good habits and saw how it could grow from there? Wouldn't they have 2X, 3X, 4X what they had? Would that make the retirement much easier for them to, outlive their not outlive their money? So I think there's a lot of opportunities for people to start young when they might have nothing. And we want to make sure we have some opportunities for that, whether it's pro bono or hourly or whatever it is, because that's where you can have the biggest impact.
Yeah, there are different. So, not to get too into the weeds, but there are different models as to how financial advising works and how the advisor gets paid.
Mm-hmm.
So, give me a sense of what that looks like, if you would, because I think people really have no idea. Because honestly, I mean, if people, they invest and they're just kind of like, okay, well, it's my money. They don't even know how the financial advisor is getting paid, probably in some cases. But there are different models of how that works.
Yeah. So historically, there's been sort of, sometimes the terminology is also confusing, right? Everybody can be a financial advisor, right? Yeah. There's no sort of like, well, if you're a financial advisor, you do it this way. It's just a title, but I would say, historically there's been brokers where you pay a commission when you buy or sell. So they only get paid, a certain amount when you buy or sell.
Right.
And then there've been investment advisors that are regulated differently, and they generally have charged a percentage of what they're managing for that client. That's sort of the most basic breakdown. There's been a lot of kind of overlap where people, might be at this firm, might be doing both, or but that's sort of the most common form. A lot of the brokerage industry is sort of slowly going away, as you can imagine.
I was going to say, because if you're solely making money off of your client buying something, then if they're not continuing to buy stuff, then it becomes not lucrative at all, even if their portfolio is growing. So for me, those are the kinds of people who may be a little pushy. Be like, hey, you got to do this, you got to do that, we got to check in, which is good. I mean, you always want to, I guess, check in, right? But what is the motive behind that?
Yeah, certainly there's a feeling that, if you're a fiduciary, if you're really in the investment advisors generally are fiduciaries, they have to do what's always in the best interest of your client, and the brokers have never been held to that standard.
Wow.
So there's always there's a different legal standard. But yeah, there is a little bit more of I've met brokers who are fine. I mean, they're doing a good job, sure. But yeah, certainly as a natural incentive, there's more of an incentive to say, look, I'm on the same side of the table with you, so I'm charging this fee, and as your account grows, my fee goes up. So I'm always in the position to be doing my best to make the best decisions for you. So there's certainly that, and a lot of things in addition. Just the industry's changed, right? I mean, there used to be one set commission for every firm charged the same commission, and then they got rid of that, and you start to see like E-Trade and Schwab and those kinds of things where they were lowering commissions, and so then a lot of folks that were historically brokers said, well, this doesn't work for us. How do we show our value? And I think hopefully a lot of the move has been towards, I think for good reasons, hope in most cases, towards let's look at the person's whole financial life. Let's build a financial plan for them, because
so disruption in that market actually did probably improve it for the clients out there, because then people are forced, instead of just going for the next sale or the next trade, then they're actually looking at the portfolio. Yeah,
that's right. And I think so I think it did help that move. Cynically, there's still folks that I think are kind of getting dragged kicking and streaming into it. I mean, I think at every level, look, we all know that every service has different levels of service and ways that you define it, right? So I could say, well, we do a financial plan. My financial plan might be different from somebody else's financial plan, right? But I think fundamentally, I think it's been a good thing for brokers to be pushed to think more about the individual and their situation and their plan and their life outside of their money. I don't think most people, not to say everyone's like this, but by and large, most people that I meet don't particularly care whether we're buying Apple or Google. Just how am I doing over time? Like, am I saving up enough to have enough for retirement? And am I not going to run out of money? Those are the biggest concerns, right?
So you don't have a lot of folks saying, "Hey, no fossil fuel industries," or that sort of thing, or
well,
is
that's I think that's sort of a different question, right? I think you can certainly, in lots of different ways, try to exclude certain categories of investments, and there are different ways to do that. But I think that's sort of where can you align the values again? If you can align your values better with your investments, and not the plan doesn't suffer, then you should do that. Right? It's going to be but we have to look at it and say, okay, how is this really being aligned with your values in the way you want? How has the performance been? What does that mean? And I think most of the time, sometimes I get a little cynical, I guess, about Wall Street, but in this case, I think in this case, I think a lot of times now it's just a buzzword, right? Like ESG. Oh, you care about the values? Okay, we're gonna put you in this ESG fund, instead of the discussion of, okay, well, what does that mean? Like, what does environmental social governance mean? What companies make you just scream?
Well, because they made it quick and easy. They're like,
Right.
Oh, we got these clients. All right, just pop them into this fund,
Right.
and we'll be all set.
So it's kind of back to the brokerage thing. Like we're just trying to create a product for the client, that we can sell to the client. And that's always the times you should run, when you feel like it's okay, I'm not a client anymore, I'm just being sold a product. Right. That's definitely something I think you want to look for, is what does this person know about me? How do they know? Why are they making these recommendations? What is it based on? And is it based on something we've discussed and we've gone into detail about, or is it just kind of like, yeah, that makes sense?
Interesting. Oh my gosh, it's fascinating. And being so, and I find that these types of roles, the role that you have as a financial advisor, certainly healthcare professionals get very personal, but like you're in a situation where people are at their most vulnerable in a lot of ways. I think that's an amazing place to be, and for people to put their trust in you. And I think it's really meaningful. And again, with the industry, how it has shifted, it sounds like that is a good shift for that more people are being forced to, hey, it's about the human being. Because what good is the whole financial picture? What does that even mean unless it's benefiting the person who is attached to that? So I think that's a really great point.
Yeah, I mean, at the end of the day, money's just a resource, and you can use it now, you can use it in the future. How do we use it? It's really the question that we're best to answer, trying to answer here, is like, what is the path of your life, and how are you going to use these resources that you have to best accomplish the life that you want?
Painting the picture.
There you go.
Tableaux Wealth. I love it. Love the name. Matthew Chester. Great pleasure, man.
Yeah,
And
thanks, John.
thanks for coming on into the studio, and we'll be talking to you.
Sounds